Oh, it's clear now.
Okay.
Yeah. Do you think this angle is good?
Speaker must be standing.
Yeah, yeah.
Can you record the voice?
It will record itself, right?
Yeah.
Couldn't get enough. Oh wow! You're from Dina? Okay, cool. Javier is second year, graduating. He's a pharmacist. Oh, okay. Oh yeah, I know. Yeah, yeah. There's a couple. Kind of a good match.
We are good. 1 second.
Yeah.
Leon Fraser, prospective student.
Am I in the way? Take your call.
What happens?
Head's in the way of the camera.
Like this light.
Not yeah.
I'll just see the angle.
Oh, did you post right? Oh, I haven't even looked.
Shakun ordered it.
Oh,
Yeah. तू नहीं बैठ सकता इधर.
Can you raise it a bit? Can you raise the camera?
No, this is the maximum height.
no.
The tripod can't be that small.
The tripod can go taller, right?
This one?
I just missed all the sections.
Oops. Nope. Hang on.
Oh. Perfect. Sorry. Yeah. Yeah.
That's like, so he's posted. I'll check my grade.
It's working. Do you want to take it forward? इधर रख के क्योंकि बहुत दूर हो जाएगा ना, सुनाई नहीं देगा क्योंकि स्पीकर नहीं है ना किसी के पास. तो अगर वो वहाँ से बोलेगा तो यहाँ तक आवाज़ आनी चाहिए. अगर तू वहाँ रख के यहाँ रख दे इधर आ जा. आवाज़ आएगी ना, क्योंकि अगर उसके पास स्पीकर होता तो फिर तो ठीक था.
ऐसे ही रहेगा, यहाँ पे रहेगा.
इसको थोड़ा बैक वो नहीं कर सकते?
जूम आउट.
हाँ ये बेस्ट है ना, ऐसे बेस्ट है. थोड़ा देख लियो, मतलब कि पहले 2-3 मिनट तक देख लियो. सॉरी 2-3 मिनट तक देख लियो कि आ रहा है कि नहीं.
And I lost out. So, but I mean, who knows? I don't know. Because they said they submitted something. And it would go to charity. That's what I was thinking. Most people aren't going to do that in the first page. They're everything and what I'll do is who knows? I mean, I think our ideas are good. We had some really good ideas about it. It won't be heartbroken. I won't be heartbroken.
No, I know, me too.
Because I don't
It was a good
necessarily... I just...
They have.
Okay, sure. I mean, retired.
On the Meyer.
Oh, okay.
Okay, very good.
And this one.
I'm still in the other. Yeah, I don't.
You understand? No, not me, but they have to.
No, I actually just has no mind. My son works for
Yes. Okay.
New York is in
Oh, that was awesome.
Are you almost ready?
I know.
Average, yeah.
20 or 25. Other than that, I don't know.
So I want to thank Himanshu for inviting me here. Those of you who don't know me, my name's Eric Larson. And I had some really sad news from upstairs. I don't know if you're aware, but Rutgers University announced that they were closing the business school as of August, and they're going to remove
April
all
Fool's Day. April Fool's Day. Come on, Professor, you get right on. You could have come up with something very better than that.
All right, I'll work on it for a year from now.
You had me, Eric.
Gotta teach them how to role play, right? We've transferred you all to writers. So
You
you're
could have said
protected.
they're passing free internships.
They're-
Everyone who's unemployed.
Oh, everybody's going to get a free internship. No, that would be cruel.
Back at home, in Southeast, my brother and
But I also
And they made such a over and it looked like they had taped it all out. I got my insurance, and I went and I picked up my phone, I was calling my insurance, and I did all of it, and then I see my brother talk to that question, I'm like, hang on a minute, and I'm sitting there looking at him, and I got to call you back, I heard the phone, like, sure enough, they had just taped plastic over the window.
They probably were gonna let it go.
I wonder how long they would have let me go. I was on the phone, like, calling them to get a, like,
No, that's what the chair for this production.
you guys are already frank today, or somebody's really keen.
And we are alert to that. But whenever somebody tries to recognize their intentions,
You always attack.
Yeah, right?
If you do well at it, I'll find you an interest.
So thank you everyone for coming to the speaker event, which is co-hosted by the Supply Chain Student Initiative and the Global Business Club. It is an absolute pleasure and a privilege for us to welcome Ed McLaughlin. He is someone with very impressive credentials, and one of them is being the Entrepreneur of the Year, the Ernst and Young Entrepreneur of the Year. After that, basically, he has started a couple of companies, the first of which was USI, which he sold to Johnson Controls, and then he became the CEO of Johnson's Controls for the Americas. After that, he has been involved with entrepreneurship activities all through. He is currently running his fourth company, Blue Sunsets LLC, which invests in startups and in real estate. He is a BA from the College of Holy Cross. He's active in philanthropy and lives with his wife in Connecticut and has 3 adult children. And I believe that he has been kind enough to get some copies of his book, which is about to be released in September 2015, so don't miss to grab one of these. And now over to you, Ed.
Okay. Very excited to be here. I guess as we understand, it's the supply chain and global business. This is the first of a series of presentations we're going to be making to business schools. So we're kind of excited. We've been very busy with the manuscript of the book. And finally, we're on the last turn of it, and we'll be distributing that in September. I'd be remiss not to introduce my co-author, Wynn Lydecker, right over here. And Mary Jo Crump has organized everything for us and is our social media director. And just a couple of things. I do like it to be interactive. I understand you're probably organizing yourselves either towards a global business liftoff of your career or supply chain. And a lot of what I'm going to be talking about today is profit. And the first and most important thing I can say is no matter which career angle you take, whether it's supply chain or it's global business or it's consulting or wherever it might be, when you're helping your client or your employer realize profit, you're definitely making a contribution, and it will show in your ability to become upwardly mobile within the companies you're working for. I want you to feel free to ask questions along the way, and I do want to point out, we're going to pass this out now. The book that we've written is called The Purpose is Profit, okay? And this is not the book. This is a pre-release snapshot of the book. Included in here are three things. The intro and first chapter to kind of give you a flavor of how we're putting this book together. The second thing is an outline of all the additional chapters. And then the last thing at the back of the book is something called the Startup Roadmap. And we're going to talk a little bit about the Startup Roadmap, but that's useful information for the folks amongst you that are thinking, geez, I'd really like to start a business. And it takes you through what I believe are the 21 most critical steps you need to think about in lifting off a new enterprise. The second thing we're going to talk about is, or that we'd like to accomplish is, we'd like to stay connected with you. We're going to pass around a sheet. It asks for your name and your email address. If you want to wait to hear what we have to say and then make a judgment as to whether you want to give your email, that's fine. What we have to say is not for everybody, but hopefully you'll take away some good value from what we have to say. The goal of this presentation is what I call the 10 Commandments of Startup Profit. It's actually a summation of chapter 10 in the book. It's kind of a summary of everything that's in the book, but spelled out in greater detail. What are my goals? Motivate entrepreneurs to start up. Learn the technique, the skills, and how to do it. Challenge you to focus on profit from the get-go. Profit is an interesting thing. People these days, I think, talk about social responsibility. My belief is making a profit and fulfilling a social mission work hand in hand. One does not come at the expense of the other. But oftentimes you can't fulfill the social mission if you're not associated with something that is making a profit, that is vital, and that is ongoing. Lastly, I want to introduce you to these 10 core profit principles. Okay, very good. I want to talk a little bit about who I am, because when I came into met in the lobby, it was interesting. I got more in touch with who you are, and when I understand your focus is global and supply chain, and my first customer was a supply chain customer, a company called Patterson Dental out of Minneapolis. They're a dental supply distributor, and that was our very first customer. The funding that underwrote the startup of my first business is a company called Baxter Healthcare. And what we did with Baxter was we consolidated all their distribution centers, so we were actively in the supply chain. And the way I met Patterson Dental, when I was at the point I was going to leave my prior employer, was at the Council of Logistics Management. So I definitely can appreciate where you're coming from with global supply chain. Go ahead. I was born in New Jersey. I was born in Bayonne, New Jersey, not far from here. I still come to New Jersey every summer and enjoy the beaches here, so I really like the place. My family's from here. So it was exciting when I heard, oh, Rutgers Business School, this is perfect, this is where I'm from. Entrepreneurial roots, both sides of my family were entrepreneurs. My mother's father started a chemical company. My father's father started a real estate and insurance company. So I always wanted to be an entrepreneur. But when I started out, I went to work for IBM. And then I switched to Hewlett-Packard and had a great time learning from IBM HP, the culture at the time was terrific for me. It was a culture where they give you as much rope as you need, and you could actually live almost an entrepreneurial way of working. But for years, I carried in my pocket a promise that I would start my own business, and I just knew that that's something that I ultimately wanted to do. But I didn't do it for, I had about 13 years of big corporate experience. We talked a little bit at the beginning when we met in the lobby that, well, by the time you're in your mid-30s, if you haven't started something, you probably won't. Well, I'm here to tell you, I was 36 when I started my first business, and there were many good reasons that we'll talk about why it worked for me and why it can work for you. So if you gain some experience in the big corporate world and you have the dream of entrepreneurship, keep that dream alive, learn what you can, and then apply what you've learned to believe. Okay. I became frustrated in the big corporate world and started my own business. And a big part of it was I liked being in control. You know, one thing you're going to experience is every idea that you have might not be perceived as the best idea by your bosses. And you might feel a sense of frustration in a big corporate life where you kind of want to, you feel pretty certain that's the right way to do something, but you're forced into, if you will, following the chain of command. And I did not want to commit my life to that. I had a way of believing it should be done, and I just frankly wanted to do it. Currently, what I work on now is new startup formation. I'm an angel investor in startups. Some people say, why did you write the book? And I said, well, a big part of it is when people ask me for money, it's one thing to give money to someone, but it's another thing for them to know how you think and how you will act after you invest. And I wanted folks to really understand, here's the money, and then here's me. And if you want me involved as well as the money, because anytime I invest, I always follow the money and get involved. And I think you'll find most angel investors operate that way too. Question I have to the group here is, how many have either started a business, plan to start, or have thought about starting a business with a show of hands? Yeah, I would be very surprised. I was thinking this has got to be almost everybody, because nowadays you just can't, whether it's Shark Tank or whatever is going on in your life, you just see it live and in color all the time. So hopefully you'll benefit from what I have to say. How many have thought about a for-profit business? How about not-for-profit? Great. Okay. Good. That'll talk to the same principles apply to not-for-profit that apply to for-profit. Yes?
Where does social enterprise stand?
How does social enterprise fit in?
Yeah. I'm
Good.
It's for-profit, but it's also kind of not-for-profit.
Okay.
Can you give a sense for that?
Sure. Well, my view on social enterprise is this. Whether you're for-profit and you have a social commitment, or you're not-for-profit and it's 100% social commitment, whatever you're part of has to be vital. In order for it to be vital, it has to have new ideas, it has to have cash flowing through its veins, and it has to have the ability to create sustainable jobs. And then you're in position to support the social responsibility that you've chosen. I think today's world, it's kind of like, well, it's one or the other. It's either profit or it's social responsibility. And I say they work together. And that's a big theme in the book, actually. Why focus on profit? Some folks challenged us on that question, and we said, why focus on profit? Well, if you start a business, you got to pay your bills. And you want to save. If you have some profits, you want to save. Also, when you hire people, you want to bring people on board to your enterprise, and you want to be able to look them in the eye and say, I've got a full-time job for you, and you and your family can become a part of this vision and this mission. And it's not that you're worried, I've hired you, and I can't keep you on my payroll because I'm not making enough money. Okay. Also, profit funds growth and expansion. If you don't have profit and you go to ask a venture capitalist or any form of the public market, or even for that matter, your family and friends, if you're losing money and you ask for expansion capital, they're going to be sensitive about taking that risk. Also, profit allows you to fulfill the social mission. And if you've started your own business, you've obviously got a vision for what you want. It fuels your vision. So when I talk about profit, the profit mandate, I call it, sometimes it can be perceived as the opposite of what's popular these days. And we thought, well, that's not really true. One does not come at the expense of the other. Okay, I'd like to read this. The operating model during the dot-com boom was the antithesis of USI's structured approach to making money. Now we're going back to the 1990s, the dot-com boom, the first one. The eventual dot-com collapse validated the benefits of operating disciplines and financial controls on the production of genuine profits, and it crystallized my belief that the purpose of every business is profit. So dial back to the 1990s. It's 1991. I started my business. It was on the heels of the S&L crisis. Things were very dire, particularly in the real estate space. People said that I was crazy to start a business in real estate at that time. We had a new idea. It took hold. The outsourcing of corporate real estate was the idea. The mantra within big corporate was do more with less. So outsourcing was a perfect solution, particularly in non-core areas. And real estate, for most businesses, is a non-core area. Okay, so during the dot-com boom in the mid-90s, as the internet started to take off, I noticed that I was working very hard, growing our business, producing a profit. And I smiled because I noticed that these companies were either going public because they had an idea, but they had no revenue. They certainly had no profit. And I was dumbfounded. I thought, how can I be working so hard in the trenches, building our business slowly but surely, and all of these other companies all of a sudden were having money pushed at them, as opposed to a really good, viable business that was growing about 40% per year. We had about a 20% profit, a net income each year, and we were saving our money, and we had no debt. So it was a pretty clean business. Even still, all these other businesses were getting money thrown at them, and then sure enough, in the year 2000, 2001, everything came to bust. And that's when it really rung true to me that if you're not making a profit and you're on the wrong side of the economic cycle, you're going to get crushed. Tonight, for example, I'm speaking on a panelist group. It's called Disruptive Technologists in New York tonight. And one of the questions that's being raised is, with the risk of another tech bubble on the horizon, can innovative startups continue to focus on user growth at the expense of profit? And I think that's a really interesting issue, because not only is the entrepreneur taking risk and the VCs, but all of those fine people that are working for those companies have a heck of a lot of risk if those companies go bust. And I think, and my issue with the group at Disruptive Technologists is raising the issue of, I think you need to be thinking about profit in your business model, not just user growth. Now, there are exceptions. Facebook, obviously, big exception. Social network, Justin Timberlake says, keep adding more users. Obviously, that was the right decision, but they had exponential user growth. And I would definitely ride that horse if I had exponential user growth. But if you're struggling on your user growth and you're losing money, and this bubble pops, you're going to be on the wrong side of the ledger, and you're probably going to be out of work. So here's the 10 Commandments of Profit. I'm going to kind of walk you through each one. If we run out of time, I'll stop and you can read about it. Go ahead. The first one everybody asks me is, how do you come up with an idea to start a business? Like, I want to start a business, but I don't have an idea. And I struggled for probably 10 years. I was chomping at the bit. I just wanted to start a business, but I didn't know what it was. And I was thinking, is it this? Is it this? And I just couldn't, I just wasn't comfortable with the risk versus the reward. And the whole time, I started to realize at the end it was really all about my competence. So as you go into global supply chain or you go into a global business position, you're going to be trained by the corporations you're working for, and you're going to be building your competence. What's unique? You have it's a combination of your knowledge, your experience, your talent, your achievement, your reputation in the field that you're competing. You're going to think about better ways to do things. You're going to come into a meeting and you're going to recommend, hey, why don't we go left instead of right? And that's going to happen a couple of times, and then you're going to say, you know what? I'm going to bank on starting a business that goes right instead of left, and I think I can build a better mousetrap, and that's the right way to go. And certainly that's the way I felt. But your years of working in another industry, or in the industry that you choose, are going to build experience, challenge, talent, competence, and you're going to think of different ways your job can be done better, and maybe you'll come to the conclusion, hey, I could set up my own business and be very successful at it. Can you go back one? The second point is, if you can identify a need for a product or service in an industry where you have distinctive competence, you can substantially increase your probability of success. I mean, just think about that. You've got competence, you've got an idea, you know the existing business models of the way in which people do business in your field. You have customer relationships. My first 2 customers, where I got my first pre-orders, were customers that I had with my prior employer. I said that I was leaving, and they said, what are you doing? We're going with you. Because they knew that I would fulfill my commitments and I would deliver, and they had a lot of trust and confidence in me. And the same thing would be true for you. If you understand the models of the industry you're in, the customers, you understand what needs are being served, how pricing is done, what the competition is, then it's those things that form, you combine that with your competence and confidence to take the step is the key. The second thing I refer to as 10 Commandments is a superior value proposition. Basically what this says is you have to understand your product's unique benefits and how it solves a very difficult problem for your customer. And the best way to prove whether it does or not is pre-orders. The company that I built, corporations were suffering from bloated overhead. We recognized that and dragged down their bottom lines. Our solution to their pain was outsourcing the real estate component, which was non-core. We saved them millions of dollars. We had a 95% contract renewal rate and was able to throw about 20% to the bottom line. Here's where I say stop. Don't start up until. Number 1, how are you going to generate revenue? How much does it cost to run your business? Do you know how you're going to make a profit? A lot of businesses these days start with an idea, but they really don't understand how they're going to make a profit. And that's, to me, heightens the risk. Now, the profit may be we're going to get users, and then we're going to transform that into profit. But that has to be factored with the economic cycle. So you take a risk with the economic cycle if you go after users and not profit. So I think when you start a business, you need to be thinking about profit from the get-go. That doesn't mean you have to make a profit from day one, but it means that your business model has to be geared towards, I'm going to be with a healthy business that does in fact generate a profit. Pre-orders, vital. Whose book is the pre-orders? The startup. the other book, the Lean Startup. Lean Startup. Sorry about that. I don't know if any of you have read or heard about the Lean Startup. It's a very popular entrepreneurial book, and it talks very much about kind of two things in particular: pre-orders, which I totally agree with, and this concept of pivoting, changing your business model, also, which I agree with. But pre-orders are vital. Also, have you lined up enough funding to reach break even? And have you planned, here's the best case, here's the worst case, and what's a likely case? And do I have enough funding to get to the point where I can achieve break even? You can certainly go out for more funding, but then you're going to water down your equity position. Go ahead.
You mentioned about pre-orders. Does it mean that USI was profitable from the beginning?
We were actually profitable from our fourth month.
Okay. I know a lot of young entrepreneurs are struggling with the cash burn initially.
Right.
I was wondering how angel investors and venture capitalists, how patient are they in terms of waiting for the company to make profit? What's their expected time frame?
I think the way I would answer that is venture capitalists and angel investors have metrics. If they decide the business idea is viable and they're going to invest in it, they're going to parcel out that capital in tranches, and they're going to measure are those thresholds each quarter or each year being met. And if they're not being met, then they're probably not going to get the additional capital they need. So that's what I would say. And as far as we were profitable from our fourth month, we actually started two businesses. And one business that I was passionate about was a miserable failure. and the service business that we built, I wasn't as passionate, but I thought, okay, we can make some money, and we'll take all the money from that business and we'll put it into this magazine idea that I had. It was called the National Register of Commercial Real Estate. And we took all the profit for 3 years from USI and we put it into the magazine, and frankly we had to shut it down and decided we got a good business, let's focus where we can make a profit, and the rest is history. Yes?
Quick question for you. How did you know going out in the future that you were going to have a profit or a positive cash flow? What kinds of things did you do or have someone do for the business to project that?
Yeah, we did a lot of modeling of what type of revenues we would expect. We did 3 cases: aggressive, conservative, moderate. We calculated all of our expenses. We pre-funded a lot of our expenses with our startup capital. We prepaid our first year lease with our startup capital because we wanted to take the pressure off so that we could focus on building the business. But to answer Eric's question, there was a lot of modeling and sensitivity analysis. As a matter of fact, we did that for 6 months before we lifted off. We would meet in our kitchen, and kids would be running around, and we'd be filling out flip charts and then putting it into spreadsheets and doing sensitivity analysis on what it was going to really take to succeed. Yes.
In terms of the modeling that you're talking about now, in some of our classes we have to do that. I'm always, I find it to be sort of nebulous, so I'm not really sure how to do that. Is that something proprietary that you're using, or are you using your own, are you finding the sensitivity models somewhere, or did you make them on your own, or are you using that from prior experience, or?
Well, there's 2 answers. One is we started out using Excel. The other is one of the reasons why we wrote at the back of this, the startup roadmap, is there's a whole section on points of sensitivity, whether you're starting a service business, and there's actually models in here, or a manufacturing business, and what you need to think about and what variables you need to enter. So this really does talk to that. Now, each business will be specific, and you can't cover every potential expense depending on the industry you're building. But if you look at the models that are in the back of this book and you transform them to an Excel spreadsheet, it'll give you a really good start. Okay. commandment number 4, take charge of the money and control it. I knew where every dollar was. Initially, it was every night. I would get, believe it or not, a balance sheet and a simple cash flow statement. And then it moved to once a week. And then as we got further in the line, once a month. But I knew at all times how much cash we had on hand. To be honest, I never even really valued the business until Johnson Controls came along and wanted to buy the business, and it forced us into a full valuation. I was more focused on, we wanted to have plenty of capital to deal with any of the cycles that we would be facing in the future. And maybe some of that had to do with when the business was born. It was born at a terrible time. I went for startup funding and I couldn't get it. I went to get an SBA loan and they said, we'll invest in the area but not in the real estate area, because it was just off the S&L prices that they didn't want to invest in that area. So it was very difficult to get funding, borrow money. And then venture capital was at a low point for risking venture capital. So we bootstrapped it, which was an awesome decision. Because the whole reason why you're starting your own business is to have control of the outcomes. And if you bootstrap it, then you have control. And if you take in a bunch of capital, you might find yourself working for somebody else, when in reality, that's why you started your idea and your business in the first place. Yes?
I have a question. So I had a business that was profitable, but in order to grow it, I would have to take from those profits and invest them. And I never felt that I had the confidence to be able to give up that profit for a portion of time in order to reinvest it to grow. So is that just like having the confidence in your model going forward, that you know that if you take this profit away, that it's hard to give up making profit, right? For a possible profit in the future. Is that just a matter of confidence that you know you're going to do better in the future?
I think it's kind of the opposite of if we build it, they will come. I think people get in trouble. If we build it, they will come. Customers will come. We were the opposite. We'll land the customer and then we'll build it. And when I say we'll build it, we'll open up a new office if we have enough customer value to underwrite the expense of that new office. So there's a confidence, and there's you don't want to build it in advance of having the orders. It was just the other night on Shark Tank, one of the folks that was looking for investment capital said they had bought $200,000 worth of supplies in advance. Did you see that?
Yeah.
In advance of having the orders to underwrite those supplies, and the sharks said that's kind of ridiculous, and they didn't get the money, I don't think. Okay. Here's another thing that can really drive profit. As you add staff, employees to your company, you want to pay them off profit. There are business models out there that pay off revenue. That is a very dangerous model, because if your sales force is out there selling something and they're paid off revenue and they're not thinking about the implications to the middle line, you can submarine your business very, very quickly. So we kept our salaries moderate, offered unlimited upside, but we paid off profit. So that turned every salesman, as well as every P&L manager, or every manager, into a P&L manager. In other words, everybody was sensitive about, was there profit? So we weren't worried all the time, did we sell something that we won't be able to perform against? Okay. And number 6 is I hired some terrific people, and when you start a business and you kind of think you're pretty terrific and you hire people, you really have to kind of allow yourself to hire people that are even smarter than you, and that's when you can really build value in your business. And sometimes I had hired some people that challenged me a lot. It even got to a point where it was upsetting. But every night when I would go to bed, I would say it was worth it. It was worth having those people because they really changed things. They did things like they revolutionized our business model. They changed our whole organizational structure. We distributed P&Ls geographically and by line of business. And I wouldn't be honest if I said I thought of all that myself. Those folks came up with those ideas, and there was a natural push-pull between listening to folks like that and wanting to and judging what's the right choice to make or what's going too far. They really did engineer the strategy on how to scale the business. So my advice is don't be afraid of hiring lightning in a bottle. It can really change your business. And don't let your ego get in the way of finding really top-flight people. Okay. I mentioned this a moment ago. We scaled the business by, we not only paid based on profit, but we scaled the business based on profit centers. And we had a matrix management. We had the geographies, and then we had lines of business. And matrix isn't right for everybody, but we did have we had 5 lines of business, and they cut across the geographies, and they were measured on profit. And then we had the geographic P&L managers responsible for everything that happened in a particular geography. And we wound up doing very well, making profit on both sides, which was kind of a check and balance. It worked very well. This is about listening to our. Go ahead.
Sorry. This pertains to like all the points you made. You keep mentioning we, and I know that a lot of aspiring entrepreneurs are sort of in a me stage in which you have an idea and you're not wondering, now what do I do? Where do I take this idea to? Whom do I work with? How do you get from the me stage to we stage? In other words, build a team to sort of be able to implement those points as a team rather than being just one person with an idea and saying, now what do I do?
Well, one of the reasons why I like business school, and I'm trying to get my son to go to business school right now, is because you're around an incubator here, and there's some people that where you have synergies, you're like-minded in your approach to things, and I think this is a great chance to get to know people. Now, whether you start the business upon graduation, or while you're at school, or 10 years from now, you've built up a network of associates here that you can connect with. And that only expands as time goes on. Frankly, the way I found the person who I first hired, my first 2 partners, I reached high, and people didn't want to take the risk. And then I had a gentleman who graduated from Fordham. He was working as a waiter, and he said, I'll do anything to get into the real estate business. And I just knew his work ethic was unquestionable. He didn't have necessarily a great pedigree, but I just knew he would be terrific. And sure enough, he was. He was fantastic. The first lightning in a bottle hire that I made at my prior employer, we were pursuing a big contract in Sacramento, California. We were up late for 2 nights in a row. The manager of the office went home. This young person stayed at the office. 2 all-nighters. And I came back to my boss and said, if we're going to expand our business, we need to hire that person. And he didn't want to do it. And I tucked it away. And we had lifted off our business, and I got a call from that person. And I thought, wow, this is fantastic. Now I've got my own business, and the person who I would think would be best I'd have an opportunity for them to come on board, and sure enough they did. But it was also a person who challenged me greatly, where I had to swallow my ego and enjoy the benefits of what they could bring to the party, which they bought a heck of a lot for the party. Number 8 is inevitably, whatever business you start, there are opportunities to apply technology to it, and I'm a big advocate of that. We developed proprietary software called Sequentra. Stands for sequential tracking. That's what people want to know in the real estate business. If you're, and probably in almost any field, is if you have a global real estate portfolio and there are literally thousands of transactions going on around the world, you want to know where every project is in its life cycle. Has it started? Has the architect been engaged? Have you found the site? Have you hired the project manager? Has the project manager hired the contractors? And will we deliver the space on time for the business unit that we're serving? So we developed a software application called Sequentra to solve that problem. And in your own business, when you start it, you'll come up with ideas of ways you can eliminate steps, improve processes, improve workflows, give customer access to information they wouldn't otherwise have, and you'll come up with ideas for ways in which you can solve that problem. A quick aside on this. So our business had grown to a point where we had enough capital that we could hire a consulting firm. We hired, I think it was Deloitte. And they came in and did a study on helping us figure out how we could best solve our customers' needs by developing our own proprietary software as a service application. And they did a very good job, but they came back and said the cost of the software will be about $500,000. And we took a step back and said, how many customers can you spend $500,000 on a vertical real estate application in a non-core area within a corporation? Not many. And we presented that back to them, and it led us, hiring them led us back to, we're going to write our own application, which we sold for about $25,000 a shot, and it worked great. It solved 80% of the need, and it was right in line with the budget. And so that's a quick aside on how a consulting firm can help you and maybe not help you so much too.
But talk a quick minute about that process of developing the software. I mean, if you're not the tech guy, you're sort of saying, here's the solution, and you're sitting with them. How do you actually develop that?
How did we do that?
Yeah.
We had one of the ways we control costs is we brought in programmers, and we brought them in under we had a technology officer who ran most of the software we needed to run our business. But then we had a customer-facing need. Sequentra is customer-facing, not internal. And we hired programmers to write that code. And we had confidence in our chief technology officer and their budget. And the processes, when you flowchart out what you're trying to do, and then you ask coders to write code against it, it becomes more transparent that it's doable. Mm-hmm. And that's how we did it. The last two, I think this is really important because of the economic cycle. We built a financial war chest. And what I mean by that is we were so concerned about what the uncertainty of the future that it was almost like our business was built after the Depression. We kept large reserves available and on our books. I remember when Johnson Controls bought our business and was doing due diligence on our financials, they said that we had about 20% of the prior year's sales in retained earnings, which is for a small business, that was a pretty good amount of cash. And we had no debt because we funded all of our growth off cash flow. So my argument is we saved the money. And in business school, a lot of the discussion I know is about you gain leverage through debt versus capital. But the leverage that we gained was right here. We got to a point where we would go to an accountant. In this particular case, Computer Science Corporation, based in Los Angeles. We met with the chief financial officer. It was between two people to win the award. And we said, we'll save you $50 million. That was our value proposition. But of course, somebody would say, well, they said they saved $50 million too. But we had so much cash available that we said, well, I'll tell you what, we'll give you the first $1 million up front. And the CFO said, if you're willing to do that, you must be serious about saving the $50 million. So we got to a point where we had so much cash that we could offer our value proposition and then back it with a cash up front in exchange for a share in the profits. We didn't just give them the money. We said, if we save the $50 million, we want 10%, but we'll give you the first $1 million up front. It worked well. Only one customer out of 10 offers took the $1 million because they didn't want to give up 10% of the bigger number. So, okay, the last one. This is probably almost goes without saying, but I don't know how you all feel, but when I read about people doing the wrong thing, and then I think how easy it is to do the right thing, I don't know why you would do the wrong thing. And we just spent a lot of time making sure that we weren't going to first jerk around our employees. So we wrote this in every contract. Make commitments and keep them, provide total quality in everything you do, be a team player, hold yourself accountable, and hold the USI team accountable. And I used to say to employees, if somebody says to you they're going to do something, you should ask them to put it in writing. And if they won't put it in writing, then you shouldn't trust them. We wanted a culture where if you said you were going to do something, you were going to do it, and you were going to be held accountable to it. I think when employees feel confident, they pull their oars in the same direction. The key to sustainable profits is productivity. If employees are worried about their job, they're worried about political gamesmanship, they're worried about this, they're losing probably somewhere between 30 and 60% of their productive output. If you can squeeze that down to where it's 90%, I'm confident, I'm productive in your employee base, you have just unlocked tremendous potential to have a hugely successful business. And our customers, we had a rule that we would tell our employees, inevitably you're going to make a mistake. If you do, just raise your hand or all. Because if a mistake gets made, it gets buried. That's what turns into a lawsuit. If you make a mistake and you go say, hey, I'm sorry, and if it's a big enough mistake, you make reparation, you pay, that builds a tremendous trust between you and your customer to a point where your customer becomes your advocate. And they want you to win, and they're trying to help you win. So I would just say that commandment, behave ethically and profits will follow, is a good one to end on. Can we go to the last slide? So, thank you very much for having us. I don't know if we passed around a sheet of paper. If you'd like to get connected, we'd like to do that. I hope you take a look at this book and let us know what you think. It's not a book, it's a booklet. The real book is coming out in September. And thank you very much for giving your time. And do you have any other questions? Yes.
In terms of your upside, is it level all employees or is it more sales and being on there?
It's a great question. We try to create upside for every employee. In some cases, it couldn't be, if you will, unlimited upside. It had to be bonuses for non-customer facing roles.
Okay. So everyone got some.
Everybody got that. Yes.
You said you are an angel investor. What are the fields that you invest in?
Which fields do I invest in? Right now, I'm investing in real estate development. I recently made an investment. I'm not sure if I followed my own advice. but a company that will have a TV show. It's called Collector's Cafe. So if you don't see that TV show come out in 6 months, you'll know that I lost some good money. And I've invested in, frankly, fitness business, just because I like to do that a little bit. And I'm open to hear new ideas. I invested in a social media application for mobile phones. It didn't go well. The business went out of business. But because of leaning into the business, I was able to get my money back, which was interesting. That's never happened.
As an angel investor, where's your range that you're looking for like investment? Are you looking close to 5 to 10,000 or
Probably 100,000, and potentially more, depending on what the opportunity is. Any other questions? Yes.
In terms of being an angel investor, what do you think about being online, crowdfunding, like Kickstarter or share stakes for real estate and stuff? Do you see them kind of taking some weight from the deals or just expanding?
I think it's great. I think it's opened up the pathway for the entrepreneurs. And that's what I really root for and like the most, because that's who I am at the core. And crowdfunding is awesome. It's a little crowded right now. We have a chapter in the book coming out. It's called Startup Funding, and it covers everything from borrowing from friends and family and the issues associated with that, to flipping over a life insurance policy, to crowdfunding, to equity crowdfunding, to what was the debt financing?
Convertible debt.
Convertible debt. It discusses, so it covers the work.
One more?
There's one.
So then, as an angel investor, if you can just give like 3 tips or 3 things that you really look for in like a team, an idea, as well as a business, what are the 3 like main things you look at as like your first kind of initial assessments when you meet someone who is interested?
I look at, do they have the competence in the area that they're building a business in? Number 1. Number 2, are they the kind of people that I would want to work with in the trenches? And do I believe they'll be there when the going gets tough? And number 3, do I think that they have a viable business model, and do they understand how they're going to make a profit? Those would be the big 3 for me.
I have one question.
Okay.
So you are speaking a lot about having competence in the field in which you're getting into, or having, so you have a startup in real estate, and I understand your prior work experience was not really in real estate. So what made you think that you have the competence and expertise in such a field to get into?
Okay, well, I worked for IBM and then Hewlett Packard, not real estate.
Yes.
But then I switched, I left this off. I went to work for a big developer out of Dallas, Texas, called Trammell Crow Company. And that was a big developer back in the day. And I joined them, and I wanted to get into the development business. And they said, no, you're going to work in the service business. And I was like, that isn't what I really wanted. But then I won this big outsourcing contract with Baxter Healthcare. The mechanics behind the business model, I think this is going to take off. And that's when I left and started a real estate outsourcing business. And real estate outsourcing, like most non-core service areas, really did take off. Thanks a lot.
Thank you very much. Thank you.
Thanks.
Thank you.